All right, so I want to go over this RIVN trade with you guys that I shared in my school community, about 7, 8 days ago. And so this was a low risk trade. If you've ever traded RIVN, then you already know. It's very inexpensive to trade. With this one, I got 6 contracts and then I sold one of them off today. But I'm going to give you guys just very, very simple rundown of why I decided to get into this trade and what I was watching before I even made the move. So let's go ahead and go to the charts. All right. And so currently over here, I am on the 4-hour time frame, but I'm going to go to the daily time frame where I initially even started planning this trade. Now, if you're in my school community, or if you've seen any of the previous videos, I talk about trading trend line. Okay, this is one of the ones that I do use often. I don't hop around strategies too much, but I do use different strategies. And trend lines are, honestly one of the easiest, if you ask me. But it takes a little bit of patience. It does take some patience, depending on the game plan and depending on the time frame that you spot the particular trend on. In this case, I spotted this on RIVM before we even got all of this little downside action. Okay, we were still up here in this area where we kind of got this tweezer top up here, and this right here was way back in December, and then we got this here. Okay, so if you're new to this, by the way, the time frames and the candle are just basically letting you know how long it took for this candle to form. So each one of these candles took one full day to form. Therefore, if it took that long, then that kind of tells us, okay, we are probably going to be planning for a longer term trade because this entire setup took a little bit of time to form. If we come over, let me say this, when I work with trend lines, I like to see at least 3 or more hits. Sometimes the more hits on the trend lines, when the breakout finally does happen, it has a better chance of doing exactly what you expect it to do, and that's to come down, whether down or up, depending on which way you have marked up the charts, which way the trend is going, all of that. Okay, now this here started back in November. So when I say, take into consideration the time frame looking on, that tells you what the game plan is probably going to be. If this right here took from November, we got up here to December, and all of this little piece here started to come down all the way into January, then that will let you know you need to have enough time on your expiration date to let this thing play out, of course. And you also need to understand the type of stock that you're trading. RIVN is not a extremely volatile stock, so it's not making these massive increments on the day or massive movements, okay? It's not making $5, $10, $15, $20 movements on the day. This ain't Tesla, this ain't MicroStrategy, this ain't AVGO. All right, this thing does not make huge moves. So you take that into consideration as well when you're picking your expiration date for this type of play. Back to the very first hit, okay? This was back in November. I didn't start tracking it here then, and not even here. When the second hit came December 11th, which is here. I still wasn't quite tracking it yet. But once we got up here, I noticed this tweezer took place up here at this $22 level. And so, of course, you zoom it out, kind of look at what you're working with. And I noticed, okay, drew the trend line out. It was still up here. So my goal was going to be we get back to the trend line. We're going to see one or two things happen. It's either going to bounce from the trend line or it's going to break. And that will initially tell you, how you can go about the play. By bounce or break, when you hit it here, okay, we came up. We retested it again here, and then the price push up. It came again. Now, it can either go from here and it can make an upside move over time. Or it could go here and then we get a breakout and then this thing starts to come down. Okay, so when you're working with trend lines, it can go either way. You can enter a call when you get on the trend line, it holds up with confirmation and it goes up. Or it could break below the trend line, you get a breakout, and you ride it down. In this case, with RIVN, we got a break below the trend line. Okay, and when that took place, I made my move. Now, you can do this thing one or two ways. Now, when I say wait for confirmation, I'm saying wait until you get the confirmation that this thing is going to be below the trend line. For example, if this candle here is kind of playing along the trend line, you get a wick below the trend line, but it has not closed below that. Unless something closed like below a trend line, below a support or resistance, I don't count it, okay? I need to see a strong confirmation that we are going to come further down. And that's either closing outside, getting a full body and wicks outside of the trend lines, or once we get, like, let's just say this thing here was kind of playing along those lines with that wick. We got another one. We finally got that closed. What I would want to see is that next candle to close lower than the one that closed potentially on the trend line, okay? So that I'm not getting faked out and this thing is just playing along these lines and then it starts to go back up, okay? So use confirmation. You can use multiple methods of confirmation, but sometimes with, working with trend lines, support and resistance or anything, you want to see those candles closing below or above the levels that you are targeting. I get that 30%, either I'm closing my trade or I'm just selling the first batch of contracts, okay? And so my targets for this thing was for us to get down to about 1586. This is right here why I sold one of my contracts today, because it came back down here to this level precisely where I had marked up. And if you notice, this is why I picked the level. We have these touches here, this same area here, so it could potentially act as a support to where the price would not close below that. And as you guys can see, we touched it, and what did they do? It pushed back up some on the close of the day. And so I was like, okay, once we get there, I'm selling my first contract and leaving the rest as runners. Now on tomorrow, what I want to see is how this thing moves, okay? If we can get below this 1586, then the next target would be 1392. But if there are any indications that we could begin to start pushing higher again, I will close out the trade. And what I'm going to do, I'm going to take you guys really quickly to the option chain for RIVN. And I want to show you guys something. This up in here, let's just say we did something for February 20th, okay? That's a month out. The strike prices or the premiums are not very expensive. You can literally get 30 days on your expiration with this thing with $100 to get into a good spot. Remember, your delta is key because that delta lets us know how much we're going to get in profit per dollar that it moves. So we want to be sure we have a decent enough delta to where our trade is moving with the stock. And coming right up in here, we got 56 cents, 62 cents, 67 cents, and they are some pretty decent. But also you kind of want to watch that spread as well. You don't want nothing with, a massive spread because it can make it harder to sell that particular trade. Okay, so that was RIVN. Definitely wanted to share that with you guys and just show the simple setup, the simple, why I made that move. And that was just simply getting a breakout from that trend line, from these little 3 touches here on this daily. Got it here, hit that first target, looking to see what happens right here, and then we can ride it down to that next and last target on this trade. And then I'll be looking to get rid of my last 5 contracts. That's all that I have for you guys on today. All right, so if you have any questions, of course, feel free to ask them down below. And with that, I will see you guys on those charts.